Shares of Uber are down today after the company gave a weak profit outlook. This comes as the transportation company is working to integrate autonomous vehicles into its ride-hailing segment. It also promoted one of its executives, who is a strong proponent of driverless vehicles, to CFO. So joining us now to break down the results is Brad Erickson, equity analyst at internet at RBC Capital Markets. It's good to have you join us. Thanks so much.
Thanks for having me. Good to see you.
So what is driving these lower profits for Uber?
Yeah, I don't know that I'd focus so much on the lower profits. In this case, I think it was a little bit of just kind of street mismodeling. But yeah, they're making investments around 3 or 4 things for the out year: new types of rides, getting into suburbs, things like that, and that will require a little bit of investment. But you know, we're splitting hairs to some degree to say there's an issue on profit here. This company is still growing very fast, a lot of fixed cost leverage, plenty of profit expansion, and good capital return.
Yeah, and a lot of big news too, right? Like Uber's promoting one of their executives, as we mentioned off the top, who's a big proponent of driverless vehicles, to be the new CFO. How do you think investors feel about this part of the announcement?
Yeah, we just published our note a little while ago and called it. We think the move or the transition in the CFO here is kind of strength to strength. The incoming CFO has a long history actually of dealing with investors. He kind of ran investor relations before he moved more into the finance department. So very well respected, did a great job in that role. And I would expect him to be kind of welcomed by the investment community with open arms.
Let's talk a little bit more about this driverless vehicles idea, because obviously it's becoming more popular. But I wonder, how does Uber balance like promoting companies like Waymo while also safeguarding its kind of long-term competitive position when it comes to driverless cars?
Yeah, it's a very, I'll admit, it's challenging to kind of understand the story of what's happening. I think you watch a company like Waymo coming into the market and clearly growing very fast, raising money, higher valuation, all that stuff. Tesla's coming into the market, and you say, gosh, logically, that's a competitive threat for Uber. And I think there's good logic to that. The reality is those players coming into the market, at least in Waymo's case, being material at this point, they are actually expanding the market, right? So Uber talked about this morning, that San Francisco is still accelerating. That makes no sense given that Waymo does have a meaningful portion of the market, let's say somewhere in the kind of 15 to 20% range. And yet clearly there is market expansion. I think longer term, the goal for Uber is to bring as many AV partners to market, not just Waymo, but there's dozens of other players trying to get to market. When they do that, that is what creates the moat. And Uber has the demand to fulfill the utilization, which makes it profitable. That's the key sort of impediment to all this. Is you can put a lot of cars on the road and run this service, and it's super cool because there's no driver in there. Problem is they're losing a lot of money still, and they got to figure that out.
But in the long run, you're saying if Uber was to venture more into the driverless vehicle space, that would benefit the company? Is that what you're saying?
Yeah, we think so. What I mean by bringing more partners to market and why that's so important is, for right now, Waymo's at a stage of their kind of growth and evolution where it makes sense probably to handle more of the business, more of the distribution, and maybe not have as many third parties involved like an Uber. And so as time goes on, it really makes sense for Uber to work with as many partners out there as possible, because in aggregate, those will ultimately likely compete away Waymo's distribution to some degree, or that's the thesis anyways. And then at some point, then the view would be that Waymo has to then come to Uber in greater size and suddenly work with them more. And then the bull case is fully in play. That's a longer term view, to be clear, but that's kind of how we think about it.
Got it. Okay, so Uber also saying that they're planning to launch robo-taxis in 10 different markets by the end of the year. Any headwinds that you're kind of anticipating with this release?
No, I think they work with a lot of good partners. They're trying to sort of, I like the fact that they're becoming kind of more open, trying to help investors meet some of these partners, learn about the technology. 10 was actually the prior target. They actually took that up this morning to as many as 15 partners, kind of half in the US, half outside the US by the end of the year. So, again, it's kind of narrative at this point. It's not going to hit the numbers, but certainly the fact that they're taking up those partnerships intra-period is a positive signal.
Okay, so 15. So you say half in the US, half elsewhere. I wonder if there's like a better market like the US, for example, to start doing this.
Uh, Anywhere is as good as anywhere, I would say. The key difference is kind of the insurance part of it, right? The U.S. being sort of we'll call it the most litigious country in the world, insurance costs are higher, and so there's going to be more of a microscope. And if you have an accident or hopefully not a fatality of some kind, there's going to be a lot of scrutiny, and it could actually push the whole industry backwards from a development and innovation standpoint. Outside the U.S., not to say that there would be any sort of less adverse view of, say, a fatality, for example, but we do think that the insurance sort of scrutiny that this market will face will be less. And so actually there's a lot of good development going on in parts of Europe and the Middle East that are looking to be very productive.
Interesting. Okay, a lot to watch for, but we'll leave it there for now. Brad Erickson, equity analyst at RBC Capital Markets. Appreciate your time today. Thanks so much.